If you're still watching crypto content today, you are part of the minority. The vast majority of people got burned, have exited, are not watching crypto anymore. If you're still interested in crypto, then probably you've got a more realistic view on things. Because as we all start out, we've got high hopes. We think we can find the next 10 or 100x altcoin, but then we get disappointed. Most people tend to lose. There's actually a quite nice way to look at what has happened in the past. What you're seeing here are the current top 13 altcoins. So this is an overview of coin market cap, and of course all of those names are very much well known. But we can go back in history. Here's the same overview 1 year ago. Here it's another year in the past, so that's now 2023. And here is 2022. So you can already see we've got Polkadot in here, we've got Polygon in here. Both of those altcoins aren't that big anymore. Here's 2021. Here is 2020. Note how there is the Crypto.com coin, nowadays called Kronos. We've got EOS in here. We've got Tezos in here. Let's go back one more year, 2019. Bitcoin SV, Stellar, Monero, and 2018. EOS now at number 5, IOTA at number 9, NEO at number 13. The further we go back in the past, the more names pop up that have been completely forgotten. They once were in the top 10, top 13, and now nobody talks about them anymore. Here's the next year, 2017. So we've got NEM, we've got Ethereum Classic, we've got Dash again, we've got Stratis. Then there's BitConnect, that used to be a Ponzi scheme. And here is 2016. Again, a lot of names we've never heard before. MadeSafe Coin, Lisk, Next. Again, we've got NEM and we've got Steem at number 3. Steem was larger than XRP. What seems to be a safe bet today might not be safe at all over the course of 5 to 10 years. Right? This is what investing is all about. We want to buy something that we can hold over the long term that will outperform, say, the S&P 500 or that will outperform Bitcoin. But the further we go back in the past, the more names pop up that aren't really relevant. In other words, the longer we just keep our investment running, the higher the likelihood is that that investment is not going to succeed. There's simply too much competition. Here is 2015. This is now 10 years ago. Yes, some of those names are still relevant. Bitcoin, XRP, Litecoin, and Dogecoin. But who really talks about Dash or MadeSafe Coin or Stellar or BitShares or banks or Next or Peercoin or Bitcoin or Namecoin for that matter? So obviously there is a lot of risk involved in buying and holding an altcoin over the long term. If we buy and trade it just because there's some momentum, just because we think there's some kind of wave of attention, then that's a different story. But if we buy and hold, there's a good chance that that altcoin will become the next Namecoin or the next MadeSafe coin. For entertainment, let's go one more year back. This is now 2014. We've got the Black coin over here and BitShares. And here is 2013. This is how far this goes back. Bitcoin and Litecoin are still relevant. Namecoin, Peercoin, Novacoin, Feathercoin, Primecoin, Terracoin, Devcoin, Frycoin, Digital Coin, Megacoin, WorldCoin, they all don't matter anymore. This WorldCoin over here, by the way, is a different WorldCoin to today. At the time, Bitcoin was at $100. And obviously, it has outperformed every single one of those coins over the years. Now, in the past, we just saw competition across the altcoins. So the most viable projects tended to rise to the top, and the projects where the insiders cashed out a lot, they tended to fall. In the future, I do believe that this whole underperformance of the altcoins is likely going to continue, but for different reasons. Have a look at the number of Bitcoin addresses with at least one BTC. Again, this is a very long-term chart. This starts in 2010. The number of those addresses tended to go up over the years. But in the last 2 years, we seem to be going sideways again. Yes, we did have periods where this orange line didn't go up, and it tends to go up further when the price is declining. Still, the current period is the longest historically speaking. Here's the same chart for the number of addresses with at least 0.1 Bitcoin. And here's the same chart for the number of addresses with 0.01 Bitcoin. So this is not necessarily an effect of simply Bitcoin being too expensive. Even if it's just about $1,000, the accumulation has slowed down considerably. The way how money is flowing now into the system has fundamentally shifted. It all used to be about self-custody. It all used to be about owning a decentralized form of wealth. But what drove the Bitcoin price from 16K to above 100K is not accumulation by the masses. Instead, it's accumulation through Wall Street ETFs and through the Bitcoin treasury companies, which is led by MicroStrategy. So those treasury companies, they never sell. This balance is always going up. And there's now roughly 750,000 Bitcoin in those hands. So that's roughly 3.5% of the entire supply. The ETFs on average also tend to not sell. There are sometimes periods where we have a bit of a decline, but on average, this also tends to go up. The treasury companies plus the ETFs now own more than 2 million of the Bitcoin supply, or in other words, 10% roughly. And so if this is now where all of the demand is coming from and the average retail investor is not interested in Bitcoin, that means we are likely going to continue to see an outperformance of the assets that are easily accessible to those investors. Again, you are now part of the minority when you're still watching videos like this. This is the surge interest of Bitcoin over time, and it went down massively since Q4 of last year. We peaked at that point, so this is when Bitcoin moved up from 60K to close to 100K, and since then, since we are hovering at around 100K, nobody has interest in the asset anymore. Have a look at the view statistics of various crypto channels on YouTube. Here is Altcoin Daily. That moved from 4.9 million views at the beginning of the year to now 2.9. So a decline of roughly 40% in views. Here is Crypto Banter. That went from 4.9 million to 2.7. Here is Ben Cohen. That moved from 2.5 million to now 1.5. Here's Coin Bureau. Again, 5 million views to 2.3. The decline is very similar across different crypto channels. Here's Virtual Bacon. The decline was even more pronounced, roughly 70%. And of course, I also had my decline. I'm trying to optimize a few things, so we do have a recovery for my channel, but my channel in the grand scheme of things is also smaller than all the others we just discussed. I actually have a theory why this channel was able to somewhat withstand the general trend. We are betting on falling prices, right? We are betting on relative valuations. And when the altcoins are doing worse than Bitcoin and Ethereum, during times like this, we tend to make money. And so while others are getting burnt in this market, we are making money, and people are starting to listen to the strategies on this channel a bit more. There is this interesting reverse correlation between the stablecoin dominance and crypto prices. So I put some vertical lines here, the red vertical lines that show the top in the stablecoin dominance. So, and this is very high. A lot of people are in stablecoins. 9% of all of cryptocurrencies market cap is in stablecoins. When this is low, there isn't as much money, relatively speaking, in stablecoins. And so when this graph is going down, stablecoins are getting deployed and people are buying the risk-on assets. They are buying altcoins and Bitcoin. And so here at the bottom now, we see the Bitcoin price. So we've got this nice inverse correlation. When the stablecoin dominance is high, the Bitcoin price is low. When the stablecoin dominance is low, the Bitcoin price is high. So we should buy Bitcoin whenever we hit this upper ceiling, right? Whenever there is a red vertical line, we should sell whenever there is the white vertical line. Currently, we are somewhat in the middle. We aren't super high in the stablecoin dominance, but we aren't super low either. Really, what keeps this market afloat is not the purchases on-chain of Bitcoin. It's the ETFs and the Bitcoin treasury companies, but more so the ETFs. And so the Bitcoin price can go up while the long-term holders are not selling. They currently are just on the sidelines. A lot of people are maturing into long-term holder territory. Once the long-term holders sell, of course, the current rally might end. But they are not selling. They are rather becoming a more important part of all of crypto. And so that makes communicating my strategy not that straightforward, right? Most people just want to know what's the next 10 or 100x investment. What can I buy and hold over the long term to then outperform Bitcoin? But this usually is not going to work. Chances are that the next thing you're buying will end up as a prime coin or a dev coin or a digital coin. But when there's not that much upside anymore for Bitcoin, when it cannot do another 100x anytime soon because it's already that large in market cap, and when buying altcoins is that risky and they all underperform Bitcoin over the long term, What's the alternative? There are three possible solutions to this. The first solution is to just completely forget about crypto completely and just buy the S&P 500, buy some gold, buy some property. That's what the vast majority of people do. The second path is to just solely focus on Bitcoin. A lot of people that got burned with the altcoins became Bitcoin maximalists afterwards. But the third approach, and that is what I think is the most profitable long term, is to bet on the structure of this market. Since we know that the altcoins tend to do that poorly long term, why don't we take advantage of that? Why don't we bet on falling prices of the altcoins relative to Bitcoin? I've made several videos on this topic. So here's one using perpetual futures on Hyperliquid to bet on relative valuations. Or here's another one, gaining from relative valuations. There's a lot to learn, but if you've got some capital to invest, then it's worth it. It's better than just to try to find the next 100x altcoin. Here are the positions that I've currently open. Of course, not every single trade works out well, but on balance, right? If the vast majority is doing well, we've got something that can do better than just buying and holding Bitcoin. The individual trades, of course, look impressive, right? This is what our community shared, what they have traded. But in the end, what really matters is what are we getting out long term? And again, most altcoins long term become the next prime coin, the XMPs of this world, which used to be 72 cents when Bitcoin was at $100 and now it's at 3 cents. Most tokens just end up as pump and dumps. And so in a way, the crypto market can be compared to other markets. There are a few participants that make most of the gains and the vast majority is losing. Now it's all important to have a strategy that's different to the vast majority. If you do the exact same thing as everybody else, if you're doing your fundamental research, read all the research papers, try to find out what's the next big technology, you're doing nothing different to all the others. And you're likely going to be in the same basket as all the others. You're likely going to perform worse than Bitcoin. Instead of hoping for the one lottery ticket that brings us the big salvation, it's better just to compound quickly over time. Just to have some kind of nice risk-return plays that outperform Bitcoin and let us build a nice pool over the long term again, right? So it's not about just shooting one hit. It's about thinking in terms of years, not in terms of weeks. So feel free to join us in premium. It's thebitcoinstrategy.com, link down below. It's $125 per month. And so a link to the website should appear directly here on the screen. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time. Cheers.